Hey guys, welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing, and I have to admit something to you. I am conflicted. Why? The SP 500, the NASDAQ. We're going to take a look as well at the 10-year yield and what's going on over there, but primarily the NASDAQ and the SP 500. I don't know how I feel about specifically this pullback over here, these two candles. I don't know whether it was a healthy pullback or not, because if you look at the past, whenever we had any type of pullback, we either usually touched and hit the 20 EMA, which is this red line, very heavily, or even broke through it toward the 50 or even below that. Whereas over here, we had probably the hottest stretch of our entire screen over here, as the slope is the most aggressive. And on that pullback, we didn't even touch that 20 EMA. And so for two main reasons. The first being is that we're still closer to the top of this ascending channel. We have been respecting for quite a while now. We're closer to the top than we are the bottom. Now, that doesn't really mean everything, because you can just trade sideways. The channel will continually go up as you're consolidating, and then you can continue making highs or go from wherever at that point. The second reason is if we continue going up to these all-time highs and we're unable to breach it and create new all-time highs, what I'm afraid of is that you now create a double top, and all of a sudden, if you get momentum toward the downside, this 20 EMA doesn't have to hold whatsoever, and then you're looking at the previous resistance becoming the new support, even the 50 EMA, and then who knows, maybe you're going toward the bottom of the channel. Now, who has any idea where it's going? No one. It could just continue consolidating, lowering this RSI, or it can stay overbought for a very long time. But what we know from the past is the lower it is in this ascending channel, the better of a buy it's been, as long as it holds this channel or this important trend line that we've been respecting for so long. If it ever breaks this point, then you might want to start reconsidering things and where the market is headed. But for now, as long as we stay in between these two lines, it's one of the better indications for me when it comes to big tech and just the stock market in general. Same kind of idea with the S&P 500. We didn't touch that 20 EMA. We see previous times it grinds up, pulls back, grinds up, pulls back, grinds up, pulls back, and so on. And even here when we corrected, it pulled back below the 50 EMA and then found that buying pressure. We pulled back over here a week into November and we didn't even touch the 20. So I'm a little bit nervous and I'm looking out for that double top just in case. And the significance of the double top is that we found those all-time highs, we found buyers, and then again we tested those same levels, and what that tells us is that there is excessive supply at those prices for the time being. What is smart money doing? They're selling out at those positions and then buying back for lower and then repeating, because rich people can do whatever they want as they have all the money to control the market. What drives the stock market? Big money, hedge funds, institutions, and so on. And taking a look at the FANG index, this one's actually a little bit more healthy because it actually touched the 20 EMA plenty of times on the daily over the past, as long as I can see, really. Which is kind of odd because the NASDAQ is made up so much of these FANG stocks. It's also important to take into consideration one of the most important stocks in the NASDAQ, the Microsoft, isn't included here, and it's doing very well ever since the beginning of October. Probably even one of the best big tech stocks, and that isn't included here. So if that was included instead of Netflix, we would get a much better indication. And I bet you this would look a lot more aggressive, probably more toward the top of this channel. But it's really impossible to make that conclusion without seeing the actual chart. I wish I could create my own kind of index. If anyone knows that that's possible, let me know in the comments below. I also want to take a look at the 10-year Treasury note yield. We have continued going up. We looked at this one the other day saying that it could have potentially put in a bottom over here, and that we're now testing key levels, the next stop being about 1.7, and after that you're looking at 1.75, 1.8, and then zooming out you're looking at 1.9, and then potentially 2. And the reason why this is important, because if it does go up significantly in the next few days or weeks, we would see significant weakness in those big tech and big multiple names, especially in the NASDAQ, which would then confirm the double top. And then from there, we would have to act accordingly. Quickly taking a look at the dollar index, this one is still beasting through. We're pretty unattached from those moving averages, so that's something to take into consideration, as well as the VIX has been going down toward that base of 15. And if we get there again, we can expect some kind of sudden spike, because that's what it does when it gets that low and we're too calm. Looking at the put-call ratio, we still aren't near that extreme, but we are tilted toward more calls being open than puts. And we're still trading at extreme greed at 82, whereas a week ago we were at 86. So we're getting there, but not quite yet. I'm not really a buyer of stocks right now. Maybe really specific names if you look for a trade here or there. Check out my video yesterday about the 8 stocks that are beaten down from their all-time highs. That could be potential buys going forward. And looking at the commodities, so Bitcoin actually had a sell-off over the last, let's say, 48 hours. Peaks of about 66, 67, 65,000. We're now trading about 59, 60,000, right on that 50 EMA, which we haven't touched since the beginning of October. So is this a shift in the momentum, or are we now trading in that channel, pulling back, or to go on the rest of our run? We just have to see how Bitcoin reacts, I did add a little bit to my position. Any pullback with Bitcoin, I'm just adding and nibbling, and until this one sees volatility toward the upside. Same idea with Ethereum, same exact thing. I just keep on nibbling whenever it goes down. Touching perfectly that 50 EMA, which again we haven't seen since the beginning of October, as it was respecting that 20 EMA. Is it a shift in momentum in the trend, or are we going to be trading sideways, or are we just pulling back in order to go higher? And Cardano still doesn't want to recover. It's now below our box. So we did have buyers step up around the 175 level, but if we do see increased weakness, this one can go lower to 170, and then we'll have to see from there. And looking quickly at gold and silver, we finally found a little bit of a peak for gold at about $18.75 per ounce, which makes sense from this previous blue line over here. So now we have several key areas if we do want to put a position into gold. So the 1850 mark, or potentially the 1830, as well as the 20 or the 50 EMA, or this potential trend line, as well as silver. We reached a peak of about 2540, 2550. We're pulling back. This previous resistance is going to be support, this 20 EMA or this 50 EMA. Nothing new to report with oil. We're still in our channel until we break it toward the bottom side or the upside. That is the end of my video. Thank you very much for watching. If you're new to the channel, welcome aboard and hit that subscribe button. As always, smash that like button, and I will see you in tomorrow's video.